Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Caliber Home Loans. At Caliber Wholesale, our products make us different, and our people make us great. Caliber Home Loans Incorporated is an industry product leader with a full offering of core conventional and government products, coupled with our innovative non-agency portfolio lending products. Contact us to learn more.
Welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway, and this is created exclusively for Mortgage News Network, brought to you by our good friends at Caliber Home Loans, who have so many great options for you to consider, but one of them is a program that's a good jumbo alternative where you can go up to $2.5 million with a 50 debt-to-income ratio and no MI, certainly worth considering. So let's take a step back here and look at what we saw last week with the jobs report. It was horrible. So let's break down the numbers. Two real reports within the jobs report. There is the establishment survey and the household survey. So the establishment or business survey, that's where we get the headline for the amount of jobs created. It was expected to come in at about 160,000 jobs, but it only came in with 30,000 job creations. Very poor, and in fact, the worst number in almost 6 years. Now, it actually gets worse than that because this was for the month of May, but the previous 2 months, for April and for March, those 2 months, the numbers that were initially reported were revised lower by a combined 59,000 jobs. Take a look at that April report. It was supposed to come in at 200, only came in at 160, was a big miss. And now that dropped down to 123. So a terrible miss compared to what people were expecting. So that report, not very good. Now, how about the household survey? This is where we get the unemployment rate from. And when we take a look at the household survey, this also gets a lot of headlines in that unemployment rate. And on the surface, you might think that this could be good because the household survey, the unemployment rate went from 5% to 4.7. Now, how does that happen? Well, it's even more strange when you take a look at the job creations in the household survey because it was even worse. Remember, the business survey had 38,000 jobs created. Well, the household survey, only 26,000 jobs created. Terrible. So why did the unemployment rate drop? Because get this, 458,000 people left the workforce, a mass exodus. Why did they leave? It's hard to say, but maybe some of them couldn't find a job, got discouraged, whatever the reason is. It's all those people leaving the workforce means you have a smaller workforce. In fact, the workforce participation rate just slightly above where it was since 1973. The fewer workers means that a greater percentage of people having jobs compared to the overall labor force means that there's more people employed, so therefore it brings down the people unemployed. So it's kind of optically it looks like 4.7 is a better number, but it's for all the wrong reasons. It was a terrible jobs report. And somebody has to maybe ask the question and bring this up here. And look, last thing I want to do is get political, but we want to see good things happen. And when you think about the mandated hikes in minimum wage, look, you want to cheer for the good thoughts there to try and have people make more money. I completely agree. But you don't want unintended consequences. And maybe, just maybe, since these mandated hikes from so many states in minimum wage, we've seen job creations drop rather precipitously. And you wonder, is it maybe too expensive for employers to hire some of these people? And some of these folks may be seeing more harm than good. Look, it's a big question. I certainly don't have the answer here, but I think it needs to be explored. And if this trend continues, maybe that should at least be questioned because we want to see more good than harm being done for these people trying to find work. Now, what does this mean for the Fed? What does this mean for us? With regards to the Fed, the media, and we talked about this, and I thought that the Fed would have a very tough time hiking rates and still stand by that. And I think that the Fed will have a tough time hiking rates in June. But I think the media had hyped it so much that people were really starting to feel that the Fed was going to hike in June. I think it's really hard for the Fed to do this in light of this terrible number that just came out because in retrospect, what if they go ahead and do it and it causes a lot of problems in the economy and maybe pushes us more rapidly towards recession? People will point to the Fed and say, what were you thinking? You had a 38,000 print in jobs and you still hiked rates? Were you nuts? I don't think the Fed wants that on their on their legacy to have made such a potential mistake. So I think they'll be patient, maybe wait for early July to get at least the numbers for the June jobs report and see what they do from there. So what does this mean for us? Well, we're enjoying lower rates. And this week we're seeing very light economic calendar. So technical indicators will be very important. And what's the one I want you to watch? I want you to watch 1.69, 1.7 on the 10-year Treasury. Kind of easy to follow. If the 10-year Treasury yield comes up against that number and is unable to break it, we could see actually move a little bit higher in rates, and I want you to be on guard and look to lock. But a break beneath that 170, 169, especially we get under 169, it's going to be party time. You'll see much lower rates ahead and get ready for a flood of refinancing. So we're right on that threshold. We'll see which way it goes from here. And look, if you want to follow the action every day, and by the way, our subscribers at MBS Highway knew to float into the jobs report on Friday. They took advantage of huge price gains. We've been calling the market exceptionally well. But it's not just that, it's all the tools that we give you to help communicate these things to your real estate agents, to your customers, and beat your competition. I'll tell you what, be tough for someone who does not have MBS Highway to go up against somebody who does have MBS Highway, because the person who's got MBS Highway has so many more tools and advantages to get that customer's trust and confidence and provide more value for the real estate agent. So why not get on board? Click the free link, get on board. If you've taken us up on the free trial, then sign up. It's a big money business. Make even more. Hope you guys have a great day. Bye-bye.
Your reputation with your referring business partners depends largely on the lenders you recommend. This is why you'll want to choose a partner who shares your commitment to customer service. At Caliber Home Loans, our products make us different and our people make us great. A leading product innovator. In addition to our core conventional, government, and jumbo loans, we've created our own non-agency portfolio lending products. These enable you to assist creditworthy clients who can demonstrate the ability to repay. To learn more, visit us online at caliberwholesale.com.
This is Mortgage News Network.